of economics. So here, by the end of the course, you want to explain what economics is, summarize what the basic concepts of economics are, including scarcity and opportunity cost, how incentives influence behavior, what specialization is and how it impacts trade, and how prices affect market activity. So I recommend watching this video on what economics is. Doing the discussion posts are key to being successful in the course, and just following the calendar. So make sure to submit the assignments, quizzes, and discussion posts on time. So economics, the economic problem that society faces underlies the definition of economics, the fundamental fact that scarcity and the necessity to allocate scarce resources between competing ends or wants, which are unlimited. So we have limited resources and we have to choose how to use them for unlimited wants. So we have to choose what we want to do with these resources. We can't have everything. We can only choose what we can have. It's similar to a budget. So one of the best applications of that is a budget. Everyone has a budget. No one has limitless money. So you have to choose what you can spend on with your budget. You can't have everything, but you have to choose what's most important to you. And that's a very important concept because no one has limitless money. So personal finance and budgeting, financial literacy is a great example of how we have scarce resources. So to be successful in this course, I recommend doing the mind tap exercises and doing the textbook questions. That's key to being successful in this course. And all of the assessments in the Ontario Learn portal are very important also. So scarcity exists when human wants exceed available resources. The scarce resources used in production of goods and services are labor, land, capital, entrepreneurship. The economic problem, scarcity forces us to make choices. Choices are costly because we must give up other opportunities that we value. So macroeconomics is the study of the aggregate or total economy, looks at economic problems as they influence the whole of scarcity, includes topics such as inflation, business cycles, unemployment, and economic growth. Microeconomics deals with smaller units within the economy, attempts to understand the decision-making behavior of firms and households and their interaction markets for particular goods and services. So hypothesis, this comes into when you do studies, research studies, statistics. So hypothesis is a testable proposition. In economics, a testable proposition about how people will behave or react or change in economic circumstances. Empirical analysis uses data to test whether a hypothesis is valid. If hypothesis is consistent with real-world observations, it's accepted as theory, difficult because controlled experimentation is seldom possible in economics. Ceteris paribus, Latin for holding up everything else constant, means isolating a variable to assess its effect. So correlation are events that usually occur together. Icy roads reduce speeds, more accidents versus causation. Causation is when one event causes another event to occur. Reduced speeds do not cause more accidents. Icy roads do. So it's very important to distinguish between correlation and causation. It is very difficult to prove causation. It takes a lot of research to prove causation, but correlation can be shown pretty quickly. But you have to do a lot of tests to figure out if something causes another, and that's very important research. So if you do end up working in a research job, make sure to do many tests over a long time period to determine if it is causation. So positive analysis is an objective testable statement. Average income is $30,000. Normative analysis is a subjective, non-testable item about what should be. Income should be more equally distributed. Labor, physical, mental effort is expended by people in the production of goods and services. Land is all natural resources used in the production of goods and services. Capital, the equipment and structures used to produce goods and services. Buildings, tools, machines, and factories. Includes human capital, productive knowledge, and skill people receive from education and training. So economic terms and theories continued. Entrepreneurs, they combine labor, land, and capital to produce goods and services, decide what and how to produce, look for ways to improve production techniques, create new products, take risks driven by the chance to make profits. Goods and services, goods, items of desire. Services are intangible acts for which people are willing to pay. Opportunity cost, the value of the best foregone alternative that was not chosen. Scarcity forces us to make choices to get more of anything that is desirable. You must accept less of something else. Marginal thinking focuses on marginal or additional choices. Marginal choices involve the effects of adding to or subtracting from the current situation, not whether to eat, sleep, or study, but how much of each. The rule of rational choice: individuals will only do something if expected marginal benefits are greater than expected marginal costs. EMB is greater than EMC. Pollution: how much? Must weigh expected marginal benefits of a cleaner environment against expected marginal costs of clean environment. Zero pollution levels would be too costly in terms of what we would have to give up. All forms of travel, grow your own food, etc. So people respond to incentives. For example, if you're given a commission for more sales, you're going to be motivated to get more sales for your company. Also, if you're given equity ownership, if you're given stock in a company, you'll likely be more motivated to increase the net income cash flow for that company through improving their operations. So incentives are very important for people to be motivated to contribute more to a company. Positive incentives encourage consumption or production, for example, subsidy. Negative incentives discourage consumption or production, for example, tax. So negative incentives, the carbon tax is a good example of that. So putting the carbon tax in will discourage pollution. Specialization, concentrating on the production of one or few goods. We all specialize to some extent: fix computers, sell cars, cut hair, rely on others to produce most of the goods and services we want. So specialization is very important because you can specialize in what you're good at, and then you can trade with another person on what they're good at. So advantage of specialization: acquire greater skill through repetition, avoid wasted time and shifting from one task to another, do the types of work for which each person is best suited, promote the use of specialized equipment. So you can specialize in one thing and trade with another person that specializes in another thing. And that's a lot more efficient than trying to do everything on your own. Comparative advantage: producing a good or service at a lower opportunity cost than other producers. Trade is an exchange of goods or services between two interested parties voluntarily. Advantage of trade: increases wealth by making both parties better off, or they wouldn't trade. Allows a person or nation to specialize in products that produces better and trade for products that others produce better. For example, Canada produces wheat, Brazil produces coffee, then they trade. So that's specialization. Canada specializes in wheat production, Brazil specializes in coffee production, and then they trade. It'd be very difficult if Canada produced both wheat and coffee, because they wouldn't be very good at producing coffee, while they'd be very good at producing wheat. So it'd be better if they just produced all wheat and just traded, because they wouldn't produce that much coffee because they don't have the conditions and capacity that Brazil does. Market system is one method of allocating resources among competing uses. Buyers and sellers indicate their wants through action and inaction. Prices communicate information about the relative value of resources, results in a shift of resources from less valued to more valued uses. Price controls are government mandated minimum or maximum prices. Market failure: when the economy fails to allocate resources efficiently on its own, the economy produces too little scientific research or too much pollution. Government can improve society's well-being by intervening. Market economy does not always communicate accurately. Market power or lack of competition can distort market prices. These situations can also lead to government intervention. Inequitable distribution: no guarantee that a market economy will provide everyone with adequate food, shelter, and healthcare. Inequities can cause strong disagreements. What is fair to one person may seem highly unfair to someone else. So yeah, review the course outline and purchase the required test with MindTap. Register into MindTap. Instructions in the registration key are found in the MindTap information module. Complete the review exercises at the end of Chapter 1. Work through the MindTap activities. So yeah, this module goes through a lot of the introduction, a lot of the terms that you'll have to use in the course.